Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 17th of June. All right, now, just before I kick things off, you may notice a couple of updates here. Now, we have starting to roll out the new part of the analysis. And the first part of this, obviously, is the update to the MyFX Trading Hub page. You will now see the weekly, the daily, and the hourly trend, as well as the central bank sentiment. Now, this is going to make it much clearer to all traders, we believe, to sort of identify what's going on. Now, more often than not, most traders are focusing on the hourly charts, and this is the noise, right? This is the noise that, yeah, sometimes it is with the current trends and what have you, but a lot of the time it's just noise that you can get caught up in price action and these sorts of things and end up trade away your cash. So you are going to start to see now how effective your analysis is using this new profile. Now, let me just incorporate this into what we've got going on here. Now, if you look at the markets, now, first thing, Monday mornings, right? This was always the case for my 20 years in investment banks, always the case. Mondays was just a wait and see, okay? You've got normal market liquidity. The good thing is there's been no gaps. There's been no Trump comments to upset things. If anything, the markets had a chance to reflect on, the last week and a half of US numbers, slightly weaker than forecast. And the market is now starting to focus very, very, very closely on the FOMC meeting on Wednesday. All right, the federal funds rate and statement. Now, this is going to be pivotal for equity markets as well as the currency markets. If the Fed do not come out, and this is a big call early doors Monday, if the Fed don't come out and start to err on the side of some sort of dovish comments about the recent data, well, you know what, equity markets will probably get belted, because they're looking for this cut in rates, equities go up, it's all hunky-dory. If there's no dovish comments, it's going to have a big implication for equity markets. And also, obviously, for the US dollar. But you know what? The currency markets, the dollar is just floating around the place, and it's a bit of a tough one to call. Obviously, the core market drivers, there's been no major change there on those two geopolitical events, the China-US situation and Brexit. They continue to unwind. But when you come back and look at the overall picture of what the currencies are doing, right? You look at the US dollar index. On the hourly charts, it's just popped up. Okay, it's now depending on what you want to read out of the media, they will change their story each day. US-China trade concerns, dollar sells off. The next day, US-China trade concerns, dollar rallies. It's like you can't have it both ways. So just understand, like the US retail sales figures, to me, it was a fraction off the mark, but you know what? The market liked it, and the situation was there was a bit of a short-term dollar rally over Friday. So now look at the picture here for dollar yen. Yeah, on the longer-term picture, it's going down, but short-term and the central bank sentiment is pretty much sideways. So there's not a hell of a lot to get overexcited about with dollar yen. Dollar CAD even more so. Yep, hourlies it's going up, but the rest of the features, not much in that. Dollar Swiss, a little bit of down still on the dailies, but on the hourlies it is creeping higher. A bit of a mixed situation there. Euro, well, we do have the hourly charts going down, and the central bank sentiment is still down, but you know what? It still hasn't broken down through the longer time frames. Sterling, dailies and hourlies in that sort of weaker picture. But, the Bank of England has been on the back foot with this Brexit issue. They can't control what's happening there. So they are sort of still on the sidelines. And longer-term weekly charts, it's more looks like it's sort of more trading sideways. Now, this is where your work comes out. Now, Aussie, this to me is the best trading pair at the moment. We've got all time frames breaking down. We've got the central bank sentiment is down. This thing is just heading south. Now, that doesn't mean that you don't see rallies in the short term. If we get weak US numbers, well, then it will sort of rally. But overall, the picture for the Aussie dollar is probably the clearest out of the major currency pairs. The Kiwi, not quite as defined as the Aussie. The recent rally in the Kiwi saw it break back up in the daily and weekly trends, back sideways. So it's not far off breaking these two longer time frames back down, I should say, about another 10 or 15 points, and it will be going down on all time frames. But so it's not far off. But to me, on Monday, on the outset, the Aussie looks like the clearest opportunity at the moment. Upcoming FX events, well, there's not a hell of a lot to get excited about today, right? Tuesday, we've got the RBA minutes. Now, the minutes last month were the catalyst for that move down. So just keep your eye on those minutes. They are going to be, well, the market will be looking very closely at those as we go through those. And then as you come in through into Wednesday, we've got a beast of a day, or a beast of a couple of days, I should say, starting with UK CPI, then Canadian CPI. Obviously, the Fed funds rate and statement will be the key part to that. Don't forget, we've got the press conference on afterwards, half an hour later. Then you come into the Kiwi GDP, the RBA governor speaking, and then you get into the Bank of England, AK, on the Thursday. So we've got a really big week. Really starts for me Wednesday, right? Wednesday's the day where you're really going to start paying attention, and that's where you can come back and analyze the markets. Now, obviously, if you haven't got the patience to wait till Wednesday, follow the upcoming events. Now, just having a look over here on our sort of charts, and once again, this is just the hourly charts. There's a fair bit of noise built into this. You can see very clearly here the Aussie. It broke down through sort of 68.80. There's another trend line just below here, which, funnily enough, held it up, 68.60. So it's going to struggle here. We've got sort of downward resistance coming in around sort of 68.90, 95. And then you've got the previous support, which is acting as a resistance around 68.80 as well. So I think at the moment, as we lead into the RBA monetary policy meeting minutes, you've got to be thinking this thing's going down. I've got to look for levels to get down. Monday is not the best day to be trading, but it's got a pretty good setup and good reason to sell. Short term, Kiwi broke down through 65.20. I think we're going to find plenty of sellers on rallies back towards 65.20, 65.40. Dollar yen, it's trading sideways. To me, it's above the cloud here. There's a chance for it to really start to cruise to the top side. And as I said at the start, there's been no geopolitical events on the screens. None that affect big countries like the US. China is a big battle, where Hong Kong, obviously, the protests in Hong Kong, that's like a geopolitical event, but it doesn't really have implications for the currency. So with no geopolitical events, the sentiment souring or increasing, I think we could see that safe haven trade unwind, and we might see dollar yen higher this week. Euro was banging away there around down through 112.70. It's found plenty of traders willing to get short. Longer term, it still hasn't broken through the daily and weekly charts, but down here at the moment, it's in limbo. You're either looking to get short on rallies, which goes with the central bank sentiment, or you're just hanging back and waiting because this trade is on. If you've missed it, you've missed it. Sterling, well, Brexit is obviously the main problem here, but it's starting to move around a fair bit. And if anything, it's starting to get some headwind to that downside. I'd be keeping a close eye on that. Hourly, daily charts pointing down at this stage. Dollar CAD, well, you got oil. It's caught up in this sort of geopolitical oil situation with the tankers getting whacked the other week or last week. So oil seems to have stabilised around 52 sort of 70. Dollar CAD still likes a bit of a bounce back into the range on the hourly charts and obviously the dailies as well. So as I mentioned, have a look through the new framework we have on the MyFX Trading Hub. I think it's going to make a lot of sense for a lot of traders and help guide you through the potential trading opportunities as we go through each day and each week. All right, guys, that's it from me. Pretty quiet start to trading just at the moment, but we've got plenty to play for. This is a pretty epic week, and I would be thinking that you probably want to keep your paint dry until, especially at least Tuesday, but Wednesday is the day for me where things really kick into gear. All right, guys, have a good trade day. We'll see you in the 247 trade zone. Cheerio.